Welcome to Crypto Talk Radio, the podcast for everyday investors like you. Visit us on the web at cryptotalkradio.net. And now, here's your host, Leister.
Thank you for that, Bailey, and welcome everybody out there in Crypto Talk Radio, found at cryptotalkradio.net. It's boring again. It's Believes Crypto. It's so boring. He was streaming video game footage while occasionally talking crypto. That's how boring it is. I told you, it's boring. It's boring again. I got a couple of bits, but it's boring. I'll give a personal update real quick. It rhymes. It was brought to my attention, so I have figures. Bishojo, they're referred to. Bishojo, they're all female, obviously. There's a collection, and there's Star Trek, so they're all female. So one of them is a female version of Captain Kirk, one's a female of Spock, and then Uhura. I found out today there's a female medical officer. She doesn't look like any of the other current, but I'm like, man, what? How did I miss? So I ordered that one, got it in there. I also ordered some Goldbacks because the Washington, D.C. released the 1 denomination. So I got some of those. They are limited. I think they only minted 50,000 of them total. So I treat them as collectibles because I figure at some point, they're just going to be a collectible something. I don't do them to spend them. I do them to collect them. And I wanted to make sure I had some when it's good art. And this is good art. It honors Washington, D.C. and Washington, all that stuff. It's not about Trump for all the TDSs. It's just Washington. So I got some of that. I have a couple of bits, nothing major. It'll probably be a short episode today. We'll go ahead and jump into this. And I have a little bit of a surprise at the tail end of the episode today. CoinMarketCap.com, and we're going to zoom out to the month chart for Bitcoin because current chatter online makes reference to a death cross. We will talk about the death cross, but just so that we can put in some perspective. Over the month chart right now, it actually shows me a slight middle, as in not quite strong, not quite weak, middle trading. It does not look good long term, but in the short, I don't see the immediate crash that is being projected online. $88,000. It is visually low, but it looks like it's trying to hold the line. Best way to state that. There was a major drop though from the, I think it's like 96,000-ish mark down to this 88,000 mark. But the reason I say that it feels middling, just like a week and a half ago, we were sitting at just shy of $95,000. It went down to about $90,000, so not far from where we're at. Went right back up again, did a little bit of a pump up to $97,000, then started dwindling down. That at least for me, that indicates that there is a concerted effort to keep the price of Bitcoin above a threshold. It's a fight. And if that fight is successful in keeping everything above the threshold, then the death cross is nullified. And so what you'll see if you look at some of these articles talking about this so-called death cross, and I do recommend that you do, there's a bunch of statements from the analysts out there regarding the death cross that it simply basically means short-term momentum is weakening. It means that there's a risk short-term, but it's not a guarantee. And it doesn't necessarily mean that there's going to be a crash. And it usually comes after there was some sort of a major dump off, right? And then with Bitcoin, there's usually a recovery back up unless there's some sort of a macro event that would exacerbate its drop. We saw this prior to when we knew that the FTX with Poof Hair fiasco and the sex house out there, before we knew that was going on, similar such behaviors had taken place. So what I'm saying in my own measure of it is there's a strong risk that things go down beneath the $60,000 mark, and that's what everybody's chatting about. Everything going on with Greenland plays a little bit into it, but most are speculating that what we're seeing is simply short-term panic. Some might speculate that it's simply trying to flush out so-called weak-handed people. Some might speculate that because institutionals are continuing to buy, regardless of these drops, that nothing's fundamentally wrong other than just certain pieces. Now, the other factor playing in for sure, and I think it's psychological, one of the wallets, Bitcoin wallets from the Silk Road era, so we're talking in terms of time, not Albrecht, I'm talking from that time. One of those wallets was sitting on close to 3,500 Bitcoin, recently started shifting some of its Bitcoin out over into SegWit, which is one of the other communication protocols for Bitcoin. So the movement of a significant amount of Bitcoin usually precedes what is expected to be a dump. Now, with that much Bitcoin on deck, it wouldn't take very much being sold. And if the person's smart, they would not liquidate all of that Bitcoin because they wouldn't get the maximum price. Because if they significantly sell their Bitcoin, the price is going to be going down and they'll be losing. If they're a smart person, which I suspect that they are, if they came from the Silk Road era, they're going to sell in chunks, smaller chunks, let's say 10 to 20 Bitcoin at a time, right? And then just kind of sit on it, 10 to 20 more, and then sit on 10 to 20 more. If they're smart. If they're a dumbass, they will sell like 100, 200, 300 just because they can, not paying attention to the decline of price that's going to happen over time. So the other theory floating out is that some of this price depreciation is a strategy to discourage this whale from dumping major amounts of their Bitcoin and further crashing the market. I know that sounds contradictory. That's why I said I'm not really sold on what's being said out in the public. I'm just sharing why they're talking about this death cross and this potential that it goes beneath 60,000 and the likelihood of what the cause is, that being institutionals influencing the price, not necessarily that anything's fundamentally wrong with Bitcoin. My measure to you guys, if you look at what happened with FTX and the price going down to $12,000 and you think about what might have happened if you'd bought in when it dropped that low, compare and then wait for it to go back up knowing it was going to, I treat it as the same situation. It's another opportunity. It's another discount opportunity to buy into it should you choose to. You just have to be careful about the timing of it because you don't know how much further down it's going to go and then the run back up. So if it does, I would say, this is my gut, right? It's a wild-eyed gut instinct. I would say if Bitcoin hits the $70,000 mark, it's probably going to have a little bit more downward motion. If it stays above the 88,000, or let's say 85,000, if it stays above that, it feels to me like we're not going to go heavily down. So it might go down to the 80s and the 70, higher 70s, and then start going back up again. I do expect some sort of a longer term crash months out. I don't expect it here in like January. It just feels too early for any significant crash behavior, barring any macro events. That's my gut instinct speaking about it. Of course, with Bitcoin going down, we also saw the decline of Ethereum on the other side with a very similar graph movement. Now, Ethereum got the worst of it, whereas Bitcoin looked like it was about to turn to the middle. Ethereum looks like it's about to head further downward. And of course, with them running lockstep, we can anticipate this is a wild-eyed number. Ethereum hitting the $2,500 mark again, because remember, it got almost that low not too long ago. So I don't think Ethereum's going to completely toast, and it's going to rebound just like Bitcoin will. Consider also that Ethereum has more eyes on it right now, given what Idiot Vitalik was talking about with his concerns on decentralization, despite the fact he caused that by moving away from proof of stake, but I digress. And the fact that messaging came out that BlackRock, at least one BlackRock, among others, were starting to build applications on Ethereum. So there's going to be more momentum backing Ethereum, but it's ultimately beholden to the price shifts and movements of Bitcoin. So Bitcoin's going to be the one to watch in the big picture. If you're wondering about the Clarity Act and follow-ons of what I did coverage about the Clarity Act in my last episode at cryptotalk.fm. and you're wondering about the follow-ons of the Clarity Act and what was going on. I said that I would be surprised if this was going to go anywhere, and I said that it felt short-sighted. I felt like it was trying to solve the wrong problem. I felt that as written, the only way to really do it is to butcher it. Recently, Egghead, who's the CEO, Brian Armstrong of Coinbase, there was a back and forth between him and a news reporter, and Ellie Tourette, I believe is the name. Brenda believes, I'm not trying to insult her. I'm simply covering what was happening, which is she gave information, presumably provided to her from an insider, that gave the impression that the White House was not happy about what was going on with the Clarity Act and certain things not happening that they wanted to happen. And Brian Armstrong, Egghead, Coinbase, comes out and essentially says that what she said is not true. However, he then backpedaled a bit and said they did ask us to kind of work with the banks on this other piece over here. So in one way, he's saying she wasn't telling the truth, but then in another way, he was saying, well, it's kind of sort of the truth, but it's not as stated. So I wasn't in the room. I can't say if it was true or not, but what I can tell you is what the crux of the issue is. The crux of the issue, and it's something I didn't even speak about. Banks right now, when you have a savings account, a CD, or something else, they offer you a yield. So, and we know it's garbage, right? What the banks are arguing is that with stable coins and this yield that they're offering for these payment stable coins, obviously the rates are significantly higher than what banks offer. We know this. The banks are arguing that because they're going to be higher than what the deposit accounts are going to be, these should be treated as, quote, bank deposits, thus subject to that regulatory scrutiny. Now, I don't really have a stake in the game. What I will tell you is that I don't conceptually disagree with the idea that this is why I don't like necessarily the yield farmings, and that's why I don't like that. The counter argument from the Coinbase side is it's not for the purposes of deposit that you're benefiting. We're not using the money and paying you for the purpose of the deposit per se. This is why I say it's kind of half and half in the way he responded. He's saying we're rewarding you for the benefit of having the assets available. The problem is that from a banking perspective, it's the same thing. This is what people don't understand about the banking system. When you deposit your assets into the bank and they pay you interest on the deposits, many don't know, and I've talked about this in an older episode, the bank is using your assets to invest in stuff and or to extend loans and or to support portfolio. They're using your money. The incentive for you to do it is the interest. That's why they offer it. That's why CDs, they pay a rate, and usually the rate's higher for the longer that you lock it in the CD, and you cannot withdraw it without a penalty because they're using that money for different things that they want to do, including investment activities. So in my case, I am looking at it as, okay, basically these interest rates are garbage. There's no real value in doing it. From the bank's perspective, it's the same thing as what crypto's proposing to do, which is we're paying you for having access to your funds. And because it's the same thing, these should be treated as bank deposits. Again, I don't have skin in that, but I see the bank's perspective, and I don't conceptually disagree that that's the case. That's why I said that I struggle to accept that this as written is going to go very much further because you've gone too close to the banking industry with what you've done to cryptocurrency. Instead of just letting it be its own independent something standalone, you've created all these silos that are too close to banking. They're too close to the banking side. The banks are going to do everything they can to fight that, not because they don't want you to have your crypto. They don't really care about the crypto. They care once you're starting to financially benefit, meaning connection to fiat as a result of the cryptocurrency, such that it removes the incentive of leaving it in the banks. You're like, well, why can't the banks step up and increase the rates? The reason that the rates are fluctuating for deposits, and I remember I dealt with a bank years ago. Oh, Marcus.com. And they offered, I think it was a 5% at the time. It's a savings account 5% of the time. And they was like, okay, well, it's going to be 3% now. They was like, well, it's going to be 1.5. Okay, well, then now there's no reason to use you versus any other bank out there. You just remove the only motivating reason to use this account. The reason that these fluctuate so rapidly has to do with how much assets, right? Do they have ready-made assets for what they want to do? Are they hurting for assets? How much investors do they have? If they're doing securities, is there buy-in on the security side? There's all sorts of factors that then drive what are we trying to offer in order to incentivize people to do it. And then there's a base one that just says, look, we'll still take your money if you don't really need it. If we're not starving for the assets, we'll still take your money. Many of the banks, they can't justify, it's not even afford, they can't justify paying significantly higher rates to you. Just like years ago, remember, for those that are old enough, it used to be you had to pay to get a checking account. You had to pay them to get a checking account. It wasn't until Washington Mutual came around talking about free checking. They started that. They were the ones that said, we're just not going to charge you for this. This is crazy. Why would we charge you to put your money in there? Because every other bank was doing that. They were charging you for the privilege of doing this stuff. And WAMU cracked it. What happened to WAMU? Right? WAMU is no more. WAMU's no more because they went too far. They said, okay, free checking. They were one of the first ones to offer the Visa debit cards without charging you and without an approval process. I remember when I went to a credit union. This was when I was really young. I was in my teens. And I applied for this account at a credit union. They were a local deal. They wouldn't give me a Visa debit card because I didn't have any credit. They refused to give me they gave me the one that's just a PIN code, and you had to go to that branch and pull cash out. That's all they would give me. Now they throw Visa and MasterCard cards at you of all kinds. I have four for accounts I recently closed sitting here. They throw them at you now, but that wasn't the case before. This rush towards acceptance of that, WAMU largely was in front of that. They were pushing the idea that you want them to do more. You want to have more customers. You want them to consume more, and you can lower the bar. But when they started lowering the bar too low, then they started killing the business. That was the whole no doc loans and no down payment loans and everything else. With cryptocurrency then coming in, talking about higher rates for things, talking about no collateral otherwise than the crypto, right? So there's no approval. We don't need a credit check because you're using your cryptocurrency to back the loan. You might be able to purchase things directly with the crypto. That means you don't need the fiat. You can bypass the system. The banks are resonating with the risk to their depository. And the depository, it's a house of cards. They depend on that in order to sustain their business. Those banks can't sustain if you do not deposit money. The whole structure depends on you depositing money. And the whole too big to fail was predicated off of not only deposits, but also loan activities. Everything is a house of cards around fiat. The banks know anything cryptocurrency that even draws close to that line is a threat to them, and they're going to push back on it. It's not about the crypto. It's about the risk to fiat. So I said, I struggle to see how this is going to go anywhere because I'm not sure. We've done too much to cryptocurrency to try to make it like the banking system, which was its fatal flaw. And the reason Gensler went on his mission, instead of just letting crypto be crypto, as I talked about with Mr. Segal on the older episode, instead of letting it be just a simple exchange that had no fiat equivalency and it just had its own intrinsic value, we went the far wrong direction. So now the Clarity Act as written, now they got to fight past the bank battles. They came back and said, well, Coinbase might relent and do what they want, which would essentially gut the bill, or it gets stuck in limbo land because the government's not going to give. If the banks fight, the government's going to bow to what the banks say. So either Egghead gives in or the banks give in. I don't think the banks are going to give in. I don't think the government's going to give in. I don't think Egghead's going to give in. So I anticipate, and I could get it wrong, but I anticipate an impasse. Look it up. I think it's going to get held up in its current form. I think a bunch is going to be gutted, and it'll lose pretty much all of the stuff that certain people find appealing. Anything that has to do with the financial aspects of it, I think are going to be gutted out of it or outright prohibited, and just turn it into a regular cryptocurrency thing that's, you can't tie it to fiat, you can't I think that's what it's going to end up being. That's my gut instinct. Speaking about the Clarity Act, I, again, could be completely, emphatically wrong. Time will tell who is and who isn't. Now, let's go ahead and discuss precious metals for the remainder of the episode. That is part of my surprise for you. Silver. I talked about it multiple times. Certain people listened, certain people didn't, but silver hit another all-time high. Recently, people estimate that silver is en route to exceeding the $100 mark. Estimates put silver roughly around $300 sometime in 2026. Do I think that it hits $300? At this point, I don't know. But the silver squeeze, I'm talking a little bit more about the silver squeeze. Real quick, the Goldback I talked about, Washington, D.C., recently just came out. They did not release the entire series. As far as I can tell, it looks like it's a special one-time deal. I say one time, but they'll probably do a series here soon. But it was for Washington, D.C. Recently released. If you're didn't know, Goldbacks are exclusively sold at jmbullion.com. So if you are interested, you must go there. They are created by a different organization, but JM Bullion has exclusive rights to sell them. So they are gold. They are gold and they are sealed in polymer, but it's gold. It represents gold. It is in certain states, it is accepted as currency within the state. And then some of the states are trying to formalize that process and say, this is basically, because at a federal level, they govern what is accepted as currency. That's why it says on the dollar, physical dollar, says this is legal tender for all notes, public and private, right? All debts, public and private, because the feds dictate what can be used as actual currency. When we say currency, actual currency, we're referring to something that equates to fiat dollar value. So they're saying that if it equates to fiat dollar value, we run the game. Same as crypto. You can exchange, you can trade all you care to, irrespective of the dollar. You can say, I got a TV, it's a 70-something inch TV. You know, if you want my TV, fine. What do you have that I might want, regardless of its dollar value? And then we do a trade, right? Like right now, I have a backup TV. I think it's a 55-inch TV. And it's a backup. If something happens to my large TV, which actually happened, and I was pissed off, then this guy serves as the backup until the other one's replaced. Well, let's say I got down the road and I said, what's the point of having a backup? I'll just get the new one and I just will live without the TV. Somebody might want my 55-inch TV. Somebody might not have the money to do it, but they might have an item that I want. It's possible. Let's say some sort of collectible, but it's not collectible to them, or they're short on cash or something. Okay, we do a trade. I'll give you my TV. I want that item and we're done. There's no fiat in that exchange, and the government doesn't care. They care when you say, well, my 55-inch TV, okay, for let's say it's $300. I'm just making up a number. $300. And with this $300, I'm going to sell it to you. Okay, for $300, you give me $300. They care. They just don't care enough. So there's a threshold, $10,000 or more. Legally, when there's a $10,000 or more transaction, cash transaction, you're supposed to report it. So if you go to the bank and you do $10,000 cash, the bank has to report this large transaction because they're trying to get ahead of, money laundering and theft and all these things. The reason I'm breaking that down is so you understand what the whole point of Goldbacks was originally to be. It was to get to where the value of gold was used for the form of currency. And somebody had the idea of creating its own type of currency that's gold. It's real gold that does not necessarily tie to fiat equivalency. The flaw is that gold in of itself, just getting it, is a fiat transaction. No matter what you do, even though gold and fiat are not connected, just getting it is a fiat transaction. So I took a different stance. I said, well, they look collectible to me. I'm looking at them. I like the artwork on them. They look collectible to me. Some of them are in limited supply. So the Washington, D.C. one I talked about, it has a number printed on it and it says 250,000. And if they're telling me that only 250,000 will ever be created, it's a natural scarcity. And with the artwork, it becomes a collectible. As a collectible, it will have its own intrinsic value to somebody. So my thought was, okay, well, as long as the art's good, I'll just pick these up and just stack them, toss them in a safe and just stack them. I'm not going to spend them because that's stupid. But later, and I learned this with the Transformers, later somebody might say, look, I really want that one. I missed out on it. They're not going to print it again. I really want it. So I want to get this one. Anybody that's old enough might remember the same kind of concept was happening with Pogs. Remember Pogs, right? Collectibles, where it's like you get all of these and there's a set, the old Monopoly pieces that Lego, right? Monopoly Lego, and you got the little Lego kits and you can collect all the ones, the Monopoly pieces, you collect all the pieces. This is what this is. Baseball cards in the olden days, comic books in the olden days. This is what this is to me. It is, there's a set, there's a collection. There's something that is saying, okay, I want to get in on that, not because there's a fiat necessarily equivalent to it, but because it's going to be presumably of value to someone someday. And that in of itself creates a value that I can use if and when later. 2, it's a natural store of value. It's a natural store of value. You're just stacking something that is, whether you do it as a Goldback or you do it as the regular bullion or you do it as rounds, it doesn't matter. You just stack it. But the Goldbacks are easier to stack than the bars, and they're easier to store than the coins. And so I said, there's no down to these things. I'm just going to grab some of these. And then that's when the collectible hit. It's like, if they're limited, which some of them say they are, if they're limited, I might be ahead of something. Now it could be I'm not alive on this earth by the time they hit a value. Then it's up to me to sell, convince somebody who would inherit it. FYI, I understand now this may not make sense to you. My recommendation to you is not to do anything with it and just check back every couple of years, because I have a theory this may, now the downside, of course, is the printing and loss of value of fiat negates what would otherwise potentially be a fortune for somebody. It's a different era. That's my thought. Let me just collect and stack these and toss them in a safe, see what happens. And they are a hedge, because at the end of it, they're a hedge against what's happening to fiat. And then bullion goes back to silver, because I don't currently buy gold bullion, not with the prices going crazy like they are, but silver bullion. I have some silver bullion. I don't have as much as some people. I saw some people are sitting on like close to 1,000 ounces of this stuff. This $300 per ounce is crazy, because you could theoretically make a lot of money if it hits $300. And I estimated $700 at the peak. Could go higher. Nobody knows. But even now, despite it hitting all-time highs, and I say all-time highs, it's all-time highs relative to the ratio. So all-time high within the ratio, absolutely. But in terms of the overall picture, it's absolutely grossly underpriced. It's not even close. Right now, it's just shy of $96 and everything's creeping up again. Just shy of $96. There was a time it was $44, but at the same time, gold is almost $4,800, right? So you have to think there's no way gold should be $4,800 freaking dollars and silver can't hit barely 100, and we're assuming that that's a peak. There's no way. There's no way. So you're going to see people online tell you gold is about to crash, silver is about to crash. It's entirely possible that they go down. Crash? I think unless there's a macro event in our favor, I don't think so. As long as you have disruption overseas, as long as you have the Greenland issue, as long as you have the Ukraine issue, as long as you have all this disruption, I think it's just going to go positive because I think people are looking for hedge. People also said that China, Japan, and other countries are stacking it, which is what's contributing to a lot of the stock shortages that are happening, which I've seen myself. So then you take that, they're stacking it, they're stashing it, they're hoarding it. Well, if you're in the U.S. and you've not gotten any, like at minimum, like a 5 ounce or something, if you've not gotten a little bit of it, it's just like Bitcoin, right? It's like you're not able to get in to the whole number because now it's crazy expensive. You have to do a fractionals. Nothing wrong with fractionals. I'm still imploring people. I would avoid gold. Like I told you, I said I would avoid gold at the moment. I would avoid platinum at the moment. I would avoid palladium even at the moment. To me, copper is still fair game, which I'll talk about in a second as I wrap up, and silver is fair game. I think both of those are fair game for the interim, right? In the next 3 years. I think they're fair game. And then watch 2026 and see what happens with this business. Because again, the ability to get a kilo of silver, and a kilo for those that don't realize, I think it's like 32 ounces, but it's crazy. These are things that could get you something that is significant in value, not for buy, sell, trade, quick cash, but hedge and strong portfolio. Whether you do it direct or you do it through 401s or whatever, but doing it direct is going to get you the most to insulate against what's happening international. Copper then, which I said I'm going to spin back on copper. People say, and they continue to say, well, it's stupid to buy copper. It doesn't make any sense. Just to remind some folks, and copper is one of those that's like an annual situation. It doesn't go in the same velocity as some of the rest of them. It's like an annual situation. Just to kind of put in perspective, in 2004, copper was $1-ish. In 2006, copper went up to almost $4. In 2009, 10, a little bit just shy of $5. It didn't go up again until 2021. 2021 is where we had a lot of stuff happening, right? So just shy of $5. As I record this, just shy of $6. Well, if you look at it, that's not a quick climb at all, nor has it ever been proposed to be a quick climb. What it is, though, is a consistent climb. There are downs, but I'm saying over time, there is a consistent climb of it. And if you look at it, if somebody had been sitting on it since 2004, that's almost a 6x. You cannot ignore that. You can't. It's long, but look at what Bitcoin's doing. It's the same thing. How's it any different? Those that are crypto, so-called maxis, it's the same concept. Some of these, it just takes decades for it to get to that point. And silver is one of those where it just happens to be we're at that max out point where supply crunch is happening. There's a rush to supplies that are there. They can't get supply out quick enough. There's international incidents and things. What do you think is going to happen if silver starts to get priced up to a point where people think it's too, quote, expensive? They're going to go to the next cheapest asset that looks like it's got any popularity. That's going to be copper. I promise you, right? So the only reason people aren't doing copper now is because silver's cheap. A. B. Cryptocurrency had its run. It's still in the mix. It's still in people's eyes. And to a lesser degree, people hear scrap metal as the chat, which scrap metal is a source, but it's not the same. And I'm saying to you, as part of a diverse portfolio and hedging against what's happening, you simply cannot go wrong with any of these low-priced metals. This doesn't mean that you should not buy dips if you choose to on gold, platinum. I just said it feels like they are all grossly overpriced at the moment. So I can picture a world where silver hits a point and gold starts to dwindle because money's moving that way. They FOMO, right? They see silver starting to hit 100, 200. Right now, they might think that it's all just a fluff and it's not going to go any further, but then they see it starting to go run up again. And then some of that gold, some of that liquidity is going to flow over into silver. I can absolutely see that happen. Again, I stressed, I bought my little brick of copper. I think it's a 10 pounder, and I'm pretty sure I bought it for like $170 and it's currently being sold for $400. I'm telling everybody who's going to pay attention to me here at CryptoTalk.fm, this is mine, right? Others are telling you about Bitcoin. I'm not suggesting Bitcoin's not a viable asset. I'm saying that you really, in diverse portfolio, precious metals, you cannot go wrong with right now because of what people think is happening, which is a squeeze. Certainly a squeeze in silver, and you have to consider the byproduct when there's a squeeze on silver. A squeeze on silver is going to create a rush from other asset classes. There's going to be people that FOMO in. If it turns out that silver does break 100 and starts going 150, let's say 200, they're going to FOMO in to it from other asset classes. Money just shifts. They're going to shift. They're going to FOMO. I can guarantee you people are going to FOMO from gold into silver. It's going to happen. People are going to FOMO from crypto into silver. It's going to happen. Copper's price is going to go up simply because it's a cheap asset and it's got a supply crunch right now. I am simply, because I'm doing it as a public service, trying to help inform about what's happening. I am so confident. I am so confident that there is a shift in mentality around asset classes. I'm so confident in this that I bought all of them. I bought platinum, I bought copper, I bought silver, I bought gold because something was happening. Something, I was watching it, right? Understanding, of course, that the premium, you got to watch it. You got to be careful about it so you don't get ripped off. It's got to go significant above. My copper brick, $170, I think the premium on it was $5, right? So having it more than double in value, I'm already at return, but I'm just going to sit on it. It's not worth selling it now. Because if it goes where I think it's going to go, let's say it goes to $10. I mean, geez, that's a major percentage return. Then the only reason it would go that high is a major shock on silver. So I had bought ounces of silver. And lastly, I said, I should buy more silver. What's holding me back from buying more silver? Well, number one, supply, because it's out of stock everywhere. So I said, well, let me wait for some supply to come in and I'm going to buy more silver. I'm going to try to hit a target number of ounces that I think makes sense. I'm probably going to avoid the kilo. I want to buy the kilo, but I'm probably going to avoid it. I know what target makes sense for me. Could I buy it now? Technically, no, but I can work towards that. I can build towards that number over time. So that's my next plan. Gold, I'm good. If Goldbacks come up that I like, I'll buy those. But other than that, I'm kind of good on gold, as it says. I'm good on palladium for now. I do want to get a little bit more of it, but I'm good on it now. And I'm good on platinum for now. I got representation in all these metals. Copper, I would love to get more copper. People think I'm crazy, especially online. And I'm like, when silver gets to a point, copper's going to go up in price because they're going to see it's cheap. They're going to see there's something there and they're going to buy into that stuff. I'm pretty sure I'm not going to buy the brick that I got, which is a 10-pound brick. I'm not going to do that again, but there are some smaller, like 1 ounce, 5 ounce, 10 ounce ones that I do want to get just to have them for collectors and for the value. And I might, because I am kind of weird this way, I might say, you know what, I'll do the bricks because there's enough price appreciation to make it make sense. Like copper right now, again, shortly under $6, just shortly under $6, just went up again. Let's say that copper hits $60 an ounce. At this brick, it's a lot of money. It's a crazy amount of money if it 10x's. It's a crazy amount of money. And it just took one brick. Well, I could sit on the brick and just be cool with that. Or I could get, let's say 1 pound, because it's a 10-pounder. I get 1 pound bricks and just get a bunch of those. And maybe and then again, the more of that you have, then just get like maybe a storage unit or something and just toss it in there. They're protected by plastic and the whole nine. Toss them in there and then just sit on it for however long, right? And because again, each graph is a positive trend. Each and every one is upward. They're not like crypto. Crypto is somewhat upward, but the volatility is significant. Copper doesn't have significant volatility to it. We have these random dips that happen. 2008 is the housing crash. It goes from $4 down to just shy, so it halves. That's not bad, right? Because right now, the volume of sales and purchases is so low, it just now started climbing, but before it was low. So it's not subject to the same level of significant disruption as you see these other assets that are higher in value. So I watch and I tell, because people who are listening to me deserve to hear a different opinion than what you might be hearing online. You might be hearing online people tell you that copper is a waste of time and a waste of money. Hey, fine. Mine is 10 pounds, and right now I'm good with 10 pounds. But if that 10 pounds, right now it's $6 an ounce, and it goes to $60 an ounce, I'm going to be the one laughing. And it's just a 10-pound brick. It's one, like, to me, the risk reward is obvious. It's like, it's a small investment. It's a beautiful brick. It's a nice brick. At worst, it's a collectible. At best, it's game changing. And I looked at it and said, okay, selling, it's going to be a different conversation, but I've got ways. So my big time summary, now I'm wrapping up. My big time summary, I'm going to continue hammering home the importance and value of precious metals in all forms, not any one specific one. I think all of them have their own separate value propositions. If you're going to get in it, I still say silver is grossly underpriced. I still think copper is grossly underpriced. I think silver is more underpriced than copper by far and away. I think that you're going to see the ratio dwindle, and it has been dwindling over time. Just in the past couple of months, you've seen a significant shift. Like the ratio gold to silver was 81, right? And that was just in November. As of right now, it's down to 50. Folks, if you believe anything of what I say, believe this. You can't go wrong with precious metals, especially if you're in crypto already. Diverse portfolio can never steer you wrong, and precious metals is the foundation. It is the key to making sure your portfolio does not crash and burn, or cannot do, because the value is going to go there when there are macro events and things that disrupt. It's not going to go to crypto. It damn sure isn't going to go to fiat. It's going to go to precious metals. It's going to go to stable assets, or at least the appearance of stable assets. Then you have to consider international stacking and hoarding, because they know something that you don't, because those other people that you listen to are not telling you the same message. I see Da Vinci Jeremy is finally, but some of the other ones I've seen, they're not talking about it either. But you're listening to people that are telling you that Bitcoin is the key, and it might be at some point. I'm not saying don't get it. I'm saying everybody should be, they're doing you a disservice by not telling you that part of your portfolio should include precious metals. That's all. Everybody should, there's no down to precious metals. None. There is no negative to it. The only negative I can possibly think of is it does require some work to sell it, because you're not supposed to just buy, sell quick over the counter business. It's wait till you have a gain, buy at the right time, sit on it for a few years. And cryptocurrency has gotten people to accept the casino, quick pump stuff. So you look at the metals and you see they're not running like that. Silver is. So I think those people are doing you a disservice by not telling you that you should have some stake in precious metals. And I'm simply saying you cannot go wrong with it. Even if you just did silver and nothing else, you can't go wrong with it. Get a little bit. You don't need to put a crap ton of money into it, because it's right now it's just shy of $100. It's $96, just shy of $96 per ounce. Then I just said, make sure you buy locally. Don't buy online, because the premiums are a joke. Because locally they'll try to, cut you a deal or something. They have to make some profit, but you can get them, negotiate them down a little bit. If you can get silver for, let's say, between 100 and 105, I think you're doing good in terms of the premium, the overhead. It's up to you whether you listen to Leister or CryptoTalk.fm or not. This is just my fair warning to anybody listening to my show, because I'm trying to ensure that your portfolio is stable, not necessarily that you win at the casino table. That rhymes.